Uh, 1, 2, 3, yeah. So welcome to our monthly community meetings. First, I want you to know that we do this almost every month. So what it means is that if you just join the community, we will do for this month, we do for next month, then the following month that way. And the idea is just to keep learning, to understand the market, understand the financial markets, gain new information, utilize it, right, and then make better return out of it. Because at the end of the day, it's not so much about the hearing, it's also about the doing. If you are not doing it, there's no way you have experience about the market. And if you don't have experience about the market, there's no way you're going to get the return out of it at the end. So, which is why it is important for us to meet every month. Look at what happened in the market, look at what advantage can be done, look at what adjustment needs to be done to your portfolio. And then from there, you can tweak one or two things. Right. So, but this particular month, and probably next month, and there's a bit of adjustment that we are making to it, and the adjustment is to actually have a good return. Actually, that's the end goal of this adjustment, to still be in that timeline of being that in that what word will I use it, to still be able to achieve what we want to achieve, but this time around we want to adjust it a bit. Why we are adjusting a bit is just to give like a wholesome knowledge into investing, not just the stock market, not just the commodity market, but also look at other forms of investment vehicle that can really drive it for people. Not everybody have the risk appetite for equity. Not everybody have the risk appetite for oil trading or something like that. But there are people that just want to sit and then look at what exactly they can bring together and learn. So which is one of the reasons why we are bringing this at this point, which is the mutual fund part of things. But after this, then we gradually move to another part. For next month, Mr. Isaac is coming. Then the following month, someone else is coming. So it will be very interesting first half of the year, so guys. So let me share my screen and then we get started. I don't want to waste your time, Nation. So let me share my screen. Let me know if you can see my screen. Yes, let me know if you can see my screen. All right, great. So I already mentioned this. We have our March community highlight. And what we want to focus on today is mutual funds. And along the way, you get to know more about the mutual fund, you get to have more idea. And most importantly, you have opportunity to ask questions. We know in our community that what is super important is question. People can tell you different things. They can tell you several things rather, but you need to ask questions to be able to streamline those loads of information to what really is effective for you. So anytime you're in a meeting, one thing that is important, listen, but pick out your question and be able to ask your question accurately, because at the end of the day, that's why we are here. It's not just for you to hear, but to be able to give feedback and learn more. So why are we doing this? This is organized by Passion Parental Capital, which is Passion Community. And the goal is very simple, just to ensure that everybody have a better life at the end of it. You come here, we share knowledge. At the end of the day, you are able to utilize that knowledge and have a better life, right? That's the idea, that's the point. That's what we are aiming to achieve. And we are doing this every month, back to back, to ensure that we achieve this every year. So now, just not to delay further, we go to what we are today. So today we have with us an amazing person, working and doing excellent work with Meristem. So let me just move a bit. Do excellent work with Meristem and ensuring that the community, when I mean the community, the financial community itself as a whole, is solid and is awful to people, right? Because what is important at the end of the day is we have people that are doing extremely important work, and they are doing it over and over again to ensure that people have the best life possible. In our challenging times in Nigeria also today, there are people that sit in that high level and firm and ensure that things go well, people have better returns that can help them to mitigate the risk and the inflation that is affecting our country at the moment. So I will briefly make this out. Of course, you guys can see it. So Mr. Salisu Mohammed is a portfolio manager at Meristem, where he focuses on portfolio management, equity market, and investment strategy. So his work involves managing client portfolio, analyzing financial market, identifying opportunity across global equities and physical instruments. So you see like the balance of the two, not the two extreme anyway, but the two important key things in the financial market, which is why he's someone you should listen to, right? Because you have that broad knowledge to be able to share several things with you. He has strong interest in financial technology, algorithm trading, and build analytical tool for investment decision making, which is super important, especially people that in this time where we are looking at AI, machine learning, algorithm, cloud, Cursor, and all those kind of things, how they're integrating into the financial system to build even more robust system, right? That you don't even need to do so many things at some point, but you are able to get a return out of it. So all these things are quite important for anybody that is going to financial market. But he is able to stand in that gap line and bring it together to help even people in the financial market, and then to help people like clients be able to get the best out of it. So you see, you're getting someone on the very high level. It's also actively involved in developing innovative financial solutions and exploring the intersection of traditional finance and emerging digital assets. So with no further delay, I will want to hand over the floor to Mr. Salisu Mohammed. So you guys should do your. So please, let's clap together. Let's clap our hands. Let's do something. Let's make noise. Let's whatever it is that you want to do. All right, good. Hi, Mr. Salisu. Are you with us? Can you hear me? Let me stop sharing. So we can know. Hello.
Hi, Moiwa. Good evening.
Oh, okay, good. I can hear you now. How are you doing today?
I'm doing great. See, you have a wonderful community here as well. It's nice to be here to speak to everybody.
Yep. We are so, we are glad that we can have you today and share your knowledge with us.
All right. Do I take the floor from here
Yeah,
on?
sure. Yep. Yes, please.
Okay. Good evening, everyone. So I'll be speaking about mutual fund investment in a much more simple way for you to understand it and for you to know why it even exists in the first place. So I'm going to begin by using a scenario. You have Joker that sells clothes in the market, right? And maybe on average, she makes maybe 200K monthly. And what you term that is an active income because you are working and that work is generating money for you. Now she is concerned. Some days she doesn't feel well, so maybe her shop is closed, so she can't make money on those days. And then you have a Mr. Joseph introducing her to, oh, you know what, you need to start thinking of other ways where you can make money passively now. So passively is like anything you put your money in that you do not have to actively be there, that is still making you money, even while you are sick, while you are sleeping or anything, it still makes money for you. So long as you don't get involved in it actively, that's the passive income. But then there's a problem. One, she doesn't want to invest in anything that when you buy today, tomorrow you are seeing um, the value of she's seeing the value of her money dropping. So you can tell that ah, she is a very risk averse person. She doesn't even want to hear, oh, market is down. She is not an economist. She did not study accounting, right? Now, there is something else, fixed income. If you go to a bank, they'll say, okay, you call it fixed deposit, it's still part of it. Once you put your money, the agreed rate there is what you will get no matter what happens, right? But then some of these investments, the barrier to entry is a bit high, right? So, for example, I, I'm aware everybody is have heard or knows what treasury bills are, right? But in as much as it's very low risk, not everybody can afford to invest in treasury bill. I mean, in order for you to do that, if you are buying it direct from the through the primary market, that is, you are getting it directly from the government, you need to have like 50 million and 1,000 naira. But now she sells clothes. Average money she make per month is 200K. So how is she going to be able to afford that? So you see, there's a problem there. And if you move to bonds, the same thing. So you see that even the safest investments that you have a very high barrier to entry for retail traders, for everyday people. So that's where mutual fund comes in. So um, back in the village, you have all these women that used to gather together to do meeting. We call them cooperative society, right? So they used to have a pool of funds, even though it's like 1,000 from everybody. At the end of the day, if you look at the money they've raised, it's significant. So that's the concept of mutual fund. We have people that cannot invest in this thing directly because they do not have that big capital to go in. But wait a minute, if we are able to bring in everybody's funds together, we can still invest in that same thing and everybody will get the same return. Just that the return you are getting is based on your own share of the total money that was raised. So mutual funds tends to lower that barrier, which means the everyday trader now can now invest in it. So that's one problem solved. Now, um, uh, every day people keep getting scammed. Um, population, like a lot of people don't really know how investment work. They don't even understand the percentages applied on this investment. And and I think this is the part where you need to talk to a lot of people, right? Like when you see an investment that is the rate of return is 20%. I know most people, once you say, oh, this investment matures in 3 months and the rate is 20%, automatically that person is going to be thinking, oh, in 3 months, I'll be making 20%. But they don't know that that 20% is what on a normal day you should earn in a year. But because that investment is now for 3 months, you are going to earn a fraction of that 20% for that 3 months. So coming back to um, where we are. So for mutual funds, we have different types of mutual fund for different types of investment. And the most popular one right now is money market. So it's money market mutual fund. If you have used World Body, Bamboo, Cowrywise, if you're on Twitter, Instagram, a lot of people that talk about this thing. But what does it really mean? So when something is money market, what it basically means is telling you that the investment that this fund or ajo, whatever name we want to call it, that fund, whatever it is invested in, it's the maximum tenor is 1 year and below. 1 year and below. It doesn't extend more than 1 year. So very short-term uh, investor centric, right? Then you hear fixed income fund or bond fund, which is basically investments that have more than 1 year to maturity to their tenure. Then you now have equities fund, right? And I think that will be the last one we will talk about because it behaves differently from every other one. Then you have the dollar fixed income fund. It's basically the same thing as the bond fund, but is now denominated in another currency, which is the US dollars. So for someone that, oh, you know what, our currency, I don't like it. I think I need to have an investment that is in another currency. You can invest in any dollar denominated mutual fund. Now, back to money market and why it should be like the first step of every newbie investor. Now, you don't have patience. You are trying to build capital, right? And the more you wait to have a huge sum of money to invest, the more likely you are not going to invest. Because one thing, you might be saving to do something. Someone will do wedding. You might be saving to do something. There'll be a plan or something will just come. You might maybe your phone, something will happen to your phone. You need to change it. That money is gone. You need to start over again. And what's the minimum investment in money market fund? It's 10,000 naira. Now, ideally, when you are planning to grow wealth, you should not look at, oh, I'm investing 10,000 naira today. How much am I expecting on the 10,000 naira? Now, I believe that the reason why the barrier to entry is that low is to help you build that discipline that even though you don't have that huge amount of capital yet, I can invest and I can keep increasing my investment because now it is easier for me to do so than to wait to raise 200K, 1 million before I come in, right? So, and though at the start, you will not you will not be encouraged by your return. And of course, can you start a business with 10,000 naira? And how much do you think you can make with that money on your own self? So, of course, a money market mutual fund is telling you that, oh, the average return so far is like 19% or 18% after tax. It means if this investment continues this performance in over 1 year, you are going to make 18% of whatever investment you have in it. So, and the way investment return works is the guys with the larger share of the fund will always have the greater return. Look at just picture your friend and yourself. Your friend invested 1 million naira in January. You invested 100K. The same time, but different money. At the end of the year, 18% on each of you guys' investments. Of course, when you look at it, you know that you with 100K, you are going home with less return in terms of naira value now compared to the 1 million naira investment. And that's not because, oh, you were cheated or something, but because that is what you contributed, your 100K and 18%, that is what you get. But his 1 million or her 1 million, that is what they get. So, and because money markets are so low risk and they are invested in almost risk-free investments, it's a basket of different investment, but 80% of what's in that fund is almost risk-free. It means you can just invest your money or maybe even automate it from your bank that every month you should be transferring money to this and you can go to sleep. Even if something is happening in a faraway country, it doesn't really bother you because that fund will still bring your return, right? So it gives you that kind of peace of mind that a beginner investor would want. So at the beginning of every investment, the first thing you shouldn't be chasing is refreshing your app every now and then to see what's your daily balance. it's going to frustrate you. First, you need to learn the concept of safety first. Once you learn the concept of safety, then you know that, oh, then I have to be patient because you can't plant a seed today and harvest something tomorrow. It takes time, it takes process. Once you have mastered patience, that's when you now know that, oh, look at this thing that I'm even worried about. At the end of the year, look at how much I've added. The thoughts that will now come to your mind now, it's not even the amount that you made. And you'll be like, if I had known, I would have even invested more. By now, I would have made more money. You see that your mindset has changed from, oh, why is the return so small? To, oh my God, I should have added more money to this investment. By now, I will be balling, right? Now, um, I think that's just the concept of money market. So let's say it's also good for people that, you're trying to save for a business, maybe your rent or even school fees, right? And you're like, maybe you don't even use any of these fintech app. You are using our traditional banks, right? That most times your money is just there. And one day you wake up, you see a minus 50 VAT. Like before you know, the 200K you are saving for something is now 199 something, right? If you have a short-term project and you're like, okay, let me not just leave this money before bank will come and remove something from it, you can just put it towards there. Because it's very short-term, you can easily accrue a little bit of interest depending on how much you have invested or how much you are locking in for that period of time. It's like it helps you plan better. You know, like, okay, instead of me putting this money somewhere that doesn't earn interest, let me just put it in a money market mutual fund. That way I make money, right? So if you move to fixed income mutual fund, the only difference between a money market mutual fund and a fixed income is that the the duration, tenor, in a simpler ways. So let's say when you plant a pepper today, it takes 90 days to mature, right? But if you plant a mango, it takes a longer time for that mango to mature. So you just take that mango as a fixed income fund. But that doesn't mean that mango will not be producing fruits in that period that you're waiting for it to mature, right? So a fixed income fund takes all the contribution in that fund from you, from other investors, from everybody around you that is invested in that fund, and invest it across different investments that have different duration. But because of the way it's structured, most of those funds will have a maturity period of more than a year. But the money market fund will always be 1 year and less, right? So that's just the difference. And you'll be asking, which one should I go for? Which one should I not go for? So it's not really about that. So um, when you understand how the market works, for example, short-term rates are very high, short-term interest rates are high. And if you look at the treasury bills, the performance is better. Treasury bill is a money market investment, meaning it has a maturity of 1 year and lower. It is not more than 1 year. So if you look at it, the rates are very attractive. And because money market mutual funds are heavily invested in that, you see that the returns will be better than what a fixed income mutual fund will be giving you now, right? But as we move on, as the economy develop, and maybe whatever structural challenges Nigeria, since we are in Nigeria, is having, once we start seeing a little bit of moderation on the short term, longer term interest rates start going higher, you see that the fixed income mutual fund will now have the better return than the money market mutual funds. So it's more about where the market is now. So right now, the money market will offer you the best return compared to a fixed income mutual fund. Now, and the barrier to entry is still low. It's 10,000 naira minimum across most of the mutual funds in Nigeria. I don't know of any that is above 10,000. And like I say, don't think about, oh, because it's so low, it means I will not get anything. You need it to build character. It doesn't mean if you don't have more, you cannot put it. you can automate your investment at any point. But for someone, if you're like Joke that doesn't really like, oh, fluctuations, I don't want to hear, oh, my money is down or something is going low or high. I just want to know that, oh, at the end of the day, I'm getting something. That is your best bet. Any other thing outside of this, you're just trying to gamble and putting yourself on a roller coaster of emotion. Now, on the dollar mutual funds, um, is basically like a fixed income mutual fund, just that it is in US dollar. Now, you have two ways of making money here. The first one is, or if your currency, the naira depreciates, it means the value of your dollar that you have invested is higher in naira terms. And because the fund also have its own performance in USD terms, let's say 7% in a year. So if you invest maybe $1,000 in a year, you get 7% of that. If your currency eventually depreciates, you still make more from that. But you also need to know that the naira can also appreciate against that currency. So that is one of the risks you should also consider. Though in the long run, I mean, if you look at the way the naira has been over the decade, you see that in the long run, the naira is likely going to be at the receiving end in the currency fluctuation. So it still gives investor that room that, you know what, in as much as I have a lot of investments in naira, let me just have something on the dollar side, right? So you can just plan it like that in a way that makes you feel, oh, I do not have my eggs in one basket. Let me just spread my investments here and there. So when naira is 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 good, your naira investment will be performing well. You'll be earning your returns in your dollar, just that maybe the naira is just um, gaining a little bit of strength. Um, so that's on that part. And another important thing you need to note about mutual funds, money markets, fixed income, dollar fund is that they distribute income periodically. So at Meristem, we have the Meristem Money Market Fund, the Meristem Fixed Income Fund, and the Meristem Dollar Fund. And for the Meristem Money Market Fund, it pays its income, call it interest or dividend, um, whichever way you want to see, it pays it quarterly, right? So every quarter you get interest that you have earned, it will be redistributed back to you, the investors in that fund. For the fixed income fund and dollar fund, it is redistributed twice in a year, and that will be January and June. So those are the two periods. Now, this category of mutual fund I've just explained now is for people like Joke that they do not want those kind of fluctuations. They just have, oh, they have something they want to save against, but they do not want to save their money in the bank, or they just need an investment that they put their mind at peace, right? And like, oh, I do not want fluctuation. Even if it's going to make me 20 million, I do not want it to come down to less than what I had invested in. So you have that peace of mind and you earn your return. Money market, fixed income, dollar, that is your bet. Now, I know most of you must have been exposed to trading stocks on the Nigerian Stock Exchange, or even using Bamboo to buy one or two US stocks, right? And again, if you're on YouTube, Instagram, TikTok, you have a lot of these guys talking about one stock and the other. And yeah, it's quite a good space to play, but it carries a very like the risk is high. Someone like Joke can never be in that kind of market because she will have heart attack. So now, and most of us are in school or working or doing one thing or the other. We are very busy, and you have all these noises on social media. You have to buy this stuff. You have to buy that stuff. Even yourself, you don't even know how to go about these things. Like this information is too much for you to digest. And before you know, 100K that you have that you could have invested in one one good stock, you are now using it to buy 5K worth of something, 2K worth of this. Before you know, you have a lot of you have you are having stock as if you are investing in the entire stock market. And at the end of the day, once you see your return, you will not be happy because you have burned everything in trading because there's transaction cost whenever you are investing, right? So because of all this information overload, especially if you are new to this market, the first thing you need to do is, "Hmm, okay, I need something that I don't really need that much. Oh, I don't have to go and be reading about MTN because, of course, this is Nigeria, and a lot of people do not like to read long material. I don't have time to go through. Oh, I did not even study accounting, so why should I go and be looking at what are all these numbers? What does revenue means? What does this means and all, right? All I want to know is this stock going to go up next month or in 3 months? I mean, except you are an oracle and you can see into tomorrow, you'll be able to answer that. But if we come down to how an investor should approach the market, especially when you are dealing with equities. Equities is the same thing as stocks or shares. You can use the same word interchangeably. Now, the same way we have money market funds that pulls investors' funds the way your Ajo will do, right? You still have the same thing for the equities market. And to me, it looks like the best way a beginner investor can just come, you know what, invest money and just go to rest. If you look at it, the stock market from 2000 and whatever, if you look at it, the stock market has always gone up. Like no matter what happens, even if the market crash, if you zoom out another 10 years, that market has gone up more than that crash. But if you go about trying to dilly-dally, look at what people are talking about, everybody is like, you'll be confused. You'll just be making unnecessary purchases here and there. So you have institutional firms, Stanbic, Meristem, and the likes. They have portfolio managers, right? And the same way you have for the money market fund, they now have it for the equity mutual fund, whereby all these investors they pull all those funds together and invest in the market on your behalf. So now you don't even have to do all the research anymore. You leave it at the expense of the firm to have that headache. Do the research for me. You know what? Invest in it. I've seen that you have a good track record. I've checked what your fund has done for the past 5 years. It's been solid. So I think I can trust you to invest my money well. So same way, low barrier to entry, 10,000 naira. And you can also automate your investment from your bank. Oh, every month I need this amount to be entering there. And that's it. All you just have to do is, the market went, NGX ASI went down today. Oh, that must be bad. But again, you are not now worried. You know that, this fund is still doing great, right? But if you are invested in one company and the company market is going up, but the company is coming down, you see where the problem is. Every other person might be making money and you are the only one stuck. You are now wondering, are village people following me? But a mutual fund give you that access to everything. Like you just invested in one thing, but that one thing is invested in so many things. So inside those many investments that mutual fund investing on the stock exchange, two might go down, 10 might go up. But overall, you still see gain in that mutual fund. So it doesn't really matter. They have spread your investment in a way that it still protects your fund. And what the thing is, it gives the most return compared um to the fixed income but because the risk profiles of both investments are different, it is not suitable to everybody, because sometimes markets can go down and sometimes it will go up. But if you stretch it over the years, you see that equity mutual fund is going to track the stock market, and the stock market has always been upward trending. No matter how many bad days you have, at the end of the day, the market still ends up going up. For a portfolio like that, that is what you get. So the reward is 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 something that attracts investor. But who who is most likely to do this kind of investment? Well, you are planning for your rent. So you are like, okay, you know what? I cannot do this now because the market can drop at this particular time. So you do a money market mutual fund or a fixed income fund because it's fixed, low risk. Your principal is monthly guaranteed. But on the equity side, even though the market can still go up in the long run, your your horizon, what you needed to use that money for, is in the short term, and maybe it's that time you want to use it that the market will not dip. You'll not be feeling bad. So at that point, you now know that okay, because this is a short-term project, I think all my projects should be invested in money market or fixed income fund. But for something I'm looking at, I need this money to become maybe a retirement plan. I need it to grow to some extent, right? I don't need it for something urgent now, but I still want to enjoy that very good return more than whatever I have put in the money market fund. Then you should go for that one, right? And they are not mutually exclusive. Because I invest in equities mutual fund does not mean I should dislike the um, money market mutual fund. You can do it in a way that, oh, you know what? I can put 30% here, 70% here, 50% here, 50% there, right? So that way you have already set up like yourself for anything you need. So I think that sums it up before I leave the floor for question. But one last thing is, in as much as all these things are out there, you still need to know that the way you have your CBN that regulates the bank, you have what we call the Securities and Exchange Commission. They have a website, www.sec.gov.ng, and once you open it, you can see for operators, for investors. You can go to the investors tab to get yourself familiar. There are some scam investments that they have identified so that you can also get yourself familiar with it so you don't fall prey. Of course, we're in Nigeria, so we have seen a lot of things come. So you can go there and see, oh, this um this company is legit. SEC is registered by SEC. SEC gave them license to operate. This one, I do not know them. Therefore, they will not see my money with them. So you have to put that at the back of your mind. After all, wherever you put your money, wherever that's your treasure. So your heart should always be there. You should treat it like your business also. So I think Muiwa can take it from here.
All right. Thank you so much. The brief and the summary was super detailed in the aspect of even breaking down to the different mutual fund that we have based on the risk, and different person can then begin to look at it. Oh, maybe I want to do more of money mutual fund, or maybe I want to do a balance fund, or you want to do equity fund, or you want to do a dollar denominated one. So thank you so much for the explanation. So we go briefly, I guess, into the questions. So we have two questions already. I don't know if you can still hear me. We have two questions already. The first person is asking about the concept of safety. I think that's at the beginning when you're trying to explain about mutual fund. So he's asking like, what's the concept of safety on it? Maybe I'll allow Bashir to go so they can give more context to his question. Mr.
Okay, good.
Patrick.
Yeah, can you hear me?
Yeah, perfectly. I can hear you.
So he was saying something around advising us not to look at the returns when we are investing. So he mentioned of concept of safety, but I did not understand. He just mentioned that particular statement of know your concept of safety and all that. So I did not understand. Okay, what kind of safety are you talking about in terms of it?
Okay. So when I mentioned that, and this is due to my own personal experience with people, um, the first time when you are trying to invest in something, your first priority should be how safe is my capital once I invest? Like, what is the guarantee of, like, what is the probability of loss of my money, right? Be, is when you think about, oh, what do I stand to lose? You know, be like, okay, what do I now stand to gain? If you are focused, because a lot of us we are thrill and reward seeking, so we don't even remember that there is something called risk. Because when you go ahead and have this conversation with people, oh, it's paying 20%, that's nice. But when you now ask them, can you take risk? They'll be like, no, I cannot take risk. I cannot even stand something happening. So you, because you are trying to build a discipline, right? Now, like I said, this traditionally, retail investors don't even have access to something like this. And when you're coming from a low capital base, you are trying to make a lot of money because, of course, um, y- we are not like the high network guys where they already have understandings of how these things work. And you see all this because you have a lot of this get rich quick scheme there. The minds of the retail investors are wired in a way that the first thing they seek is return. They don't even think about the risk. So now, when bringing this down to retail level, now you need to make them see it the way the high net worth individuals see it. What is the probability of loss on my capital on this investment? Because it is when you have capital that you can even say, oh, it earns return. If you lose your money to zero, even if you have 100%, your money is zero. So 100% of zero will always give you zero, right? But when you start thinking of, oh, it is a low risk investment. Oh, so how much does it now return? You're now speaking like someone that understands investment. But when you start asking questions like, in a month's time, how much will I have made? In 3 months' time, how much have I made? You are sounding like someone that gambles. You are not looking at it like an investor should. So you need to build that mindset first, because from a from it from small capital, if you are unable to build that mindset, you will struggle with big money, because everybody is out there trying to make more money, right? Because when you don't have the discipline of um, safety of capital and all, when big money enters your hand, trust me, you most likely lose it to something because you are seeing a shiny return. All you are thinking about is, oh, it's going to double my money. It's going to double my money. You're not even thinking about what else can happen. What if your money doubles back to zero? So you need that mindset. You need to prioritize safety of capital first, then you not think of return.
Mm, okay, cool. Thank you so much. Though there are some follow-up questions, but I'll just let us take it as we have it on the chart. The next person is asking that what's the current percentage rate for dollar mutual fund? So I will assume the person is asking like maybe past few years or year to date. Any of those two options I think would work. So
Sorry, can you take that again?
yeah, sure. The person is asking that what is the current percentage range for the dollar mutual fund? So you mentioned we have the money market fund, the equity fund, and then the dollar mutual fund. So the person is asking like, what is the current range? So it could be like, 4% to 5% in USD. It could be 5% to 7% USD. So that's what the person is asking.
So 2024 and 2025, we have averaged about, and that's speaking to the Meristem Dollar Fund, we have averaged about 6 to 7% year to date. That is from January to the December of those years. That is what you normally see.
All right, great. Thank you. I believe that answered the person's question. So let me move to the next question. So this person is asking, how do we start with what we have? How do we start with what we have? Do you mean that we should choose one of the mutual funds depending on the amount of money someone has? So is it more like, depending on the amount that you have, you can then choose which of the mutual fund type that you can invest in?
Okay, so so you don't have to look at it from the perspective of how much I have. So it's about what exactly that money you have is meant for. And like I said, if you have something that you need to do in 3 months, you already have the timeline. Like, in 3 months, I want to use this money for something. So you know that that money is going to be spent on something in 3 months, right? But you don't want to have that money stuck up somewhere, and it's just like at the end of the day, maybe you don't even earn anything on it. So a money market fund is best suited for that, right? And before all this, what most people will do is they will just go to the bank and do fixed deposit for that. In 3 months' time, I'll come back for my money, right? But for the money market fund, it's something that you can top up, unlike the fixed deposit that will give you, for some banks will tell you need a minimum of 200K. What if you don't have 200K at that point? What should you do? That means you hold your money. But for this, it already tells you can invest as low as 10K. So if what I want to do is I need 300K at the end of 3 months to do something, but now I have 50K, I can put 50K in the mutual in the money market fund. When month ends and I have additional money, I will top it up and my money will increase, right? As you do that, those individual funds you are putting are also earning interest. So at the end of your your own timeline of where you need that, once you withdraw your money, you still have your interest there for you. So it still works, but you can't do that with fixed deposit.
Okay. I guess in addition to that, would be something that you mentioned. First, you want to understand the amount you want. What timeline are you looking at? So let's say, for example, you have money that you want to use for rent in the next 6 months. You want to be careful of putting into like equity fund, not because it cannot do it, but because of the volatility of the market. So in that scenario, it makes more sense if you put into money market mutual fund, right, than when you put into an equity fund. But let's now say it's something that you are looking for like longer time, then you can begin to then think about putting in an equity fund, because you know that whatsoever happens in the market will not necessarily affect you, because you can still stay longer time. So you want to look at that time horizon of your need to be able to know if you want to put into this or into that. Another risky part of it is dollar. You cannot control FX. You don't know what is going to happen in the next 2 days, 3 days, 4 days. So you want to put money into that. You want to be sure that it's money that can take longer time. Let's say a year or something, right? But if you know it's money you need in like 2 months, 3 months, you want to ensure you put it into a mutual fund that is less risky, and which is where the money market mutual fund comes in, that as he explained. So we'll move to the next question. So this person is asking about the impact of the current war on the money market fund. How is it in the good side? Is it in the bad side? And if it's in the bad side, how severe is it?
Okay. So for the money market fund, so generally, because of the war, um, I'm going to be a little bit technical. So the war is being fought somewhere far away, but then it has affected something that we use to power our daily life, petroleum. Now, price of petrol has gone up. So what does that translate to? You cannot enter Yaba to VI, the normal price you used to do. So you've seen increase in price there. Now, because of that increase in price, people that used to transport food, that used to maybe food you used to buy 1.5 is now maybe 1.8 or 2,000. Now you see that that price is affecting everything little by little. So what that also means is inflation has also gone up. And because of the short term is happening in the short term. So rates, interest rates now, which can be rates on borrowing, rates on short-term investment, same as maybe even long-term investment. You can see that because of this new risk that you have happening somewhere far away, but you have explained how this effect just passed through everything and it's now affecting me. That I don't even care about the US or the Iran or whatever thing they're fighting for, but now I'm not suffering for it. If I'm going to invest in anywhere, the normal way is, oh, because the money I have now has lost um, value compared to what I used to do before. I want more interest on this. So that's a typical way bank, when you want to borrow money from bank, that's how they assess you. Oh, you used to pay your loan on time. So they give you a fair rate. But you are unable to pay it one time and the next time you come back, they increase the rate and say, oh, because they feel you have this risk that you might not be able to pay back. So we have to ensure that we put more rates for you. So same way you as an investor, when there is this thing, it affects you personally because inflation goes up, money you have cannot buy what you used to buy anymore. So if you are going to invest, you will require more return. So when we bring it back to the money market, then we expect this money market investment rates to also go up. But also mind you that these funds have already been invested in something that has a fixed rate. So for the fund return to start going up, whatever new funds they have will now be invested in the new available investments in the market. So if those investment rates are now higher than what it was before, then you should see that those money market funds will start going up.
Yeah, okay.
So that's the effect you should get. But of course, it's not something that just happened immediately, right? It might take, you might just see a gradual bump and then everything will come back to normal. Except it is a prolonged event, then you should expect that to happen.
All right. Thank you, Mr. Samuel. Yeah, I don't know if that has been answered, so we move to the next one. Okay. So the next, yes, sorry, go ahead, please. Okay. I guess his hand was up. Maybe he was stretching and then he has went off. But anyways, let's move to the next question. So this person is asking that how do I reduce risk and have a steady growth?
How do you reduce risk and have a steady growth?
Steady growth, yeah.
So If you are speaking like someone that if you are speaking like someone that is related to the joke we have um we referenced during the whole story, then the money market is your base case. Like that is where you should be in.
Mm,
If you are you what you get there is low risk, steady growth. By steady, it means it doesn't fluctuate. It just stays. It just give you one consistent rate of over a period of time without any unnecessary. You see it up and then it comes down.
mm,
So that is your low risk and steady return.
mm. Okay. Yeah. So it's more like what you said now is more like you know that you do not want risk, just do with something that is risk free. So which is a money market mutual fund, and then you can just do it consistently, and then you'll be able to have it like it's steady growth. Um, so if you move to the next question, the person said you mentioned dividend for mutual fund. Do all mutual funds give dividend, or is it just very tempting?
Well, the the investment pays interest. So whether you're on the fixed income side or you're on the money market side, they all
Mhm.
pay interest, right? And those interests belongs to the investors of that fund. So yes, it has to come back to you. Even on the equity side as well. When the companies that fund has bought their shares pays dividends, that dividend will be redistributed back to the investors of that fund. Now, the frequency of that distribution will now depend on how each of those funds was structured. So the way you have Constitution of the Federal Republic of Nigeria, you still have something like that for each of these funds that tells the fund manager and every related party, oh, this is how we'll be distributing this either once in a year, twice in a year. So that's how it is. But so long as whatever the fund is invested in pays income, those income is attributable to the investors of that fund.
All right, great. Makes sense. So the next question is asking, this like two questions. So let me start with the second question. It said, how can I get started with money market fund? Like, how can he actually get started with it? And then the second question is that um, when the person top up for money market fund, will the interest also increase? So let's say, for example, he has invested before, they now top up, will the interest also increase?
So I don't want to say yes outrightly, so I don't confuse you. So let's assume it was 18%. I invested 1 million naira in January, right? And in February it's still 80%. So you have 500k, and I invested 500k. So what you now have is 1.5 million. So it is the same percentage. The only difference is your 1 million naira was there before the 500 k. It means for those days the 500k was not there. That 1 million naira was earning 18%. But now that you have 500k included with the 1 million, you now have 1.5. So from that day that it becomes 1.5, your money will now be earning the 18% going forward until maybe the rate increase or it drops a bit. But rate dropping doesn't mean you lose money. It means maybe it means that the return is now less than what it should have been when you saw it. So
Mm,
your principal is guaranteed. The rate of return fluctuate based because the fund has investment that they mature at different times. So once the investment mature, the fund manager will now need to use that fund to invest in another investment. And maybe as at the time those funds are maturing, the current rate in the market is now less because the fund manager cannot hold cash. If you are holding cash, the fund manager is not earning money for anybody because cash is cash, right? So you just have to invest it. But that so when you look at the track record of the, oh, this fund is good. It's just a general market and low rate environment. But when rates pick up, you see that the fund will also follow suit.
Mm, mm, mm. Okay, okay. So does it mean in that kind of scenario, does it mean if the person invests in January and the rate was 80%, in February the person will be able to see what the new rate will be? Maybe that is now 17% or 15% going forward, or
Oh,
is it
okay,
yeah?
okay. So the fund valuation, like those rates, you'll be seeing it daily. So today you might see 18%, tomorrow you might see 18 point something percent, next
Mm,
tomorrow. So every day you know that okay, this is so it's a daily thing. You'll be seeing what those rates are on a daily basis.
mm, mm. All right, cool. So the person's first question, sorry, second question. Just like the way we have Stanbic IBTC have their app and then you can invest in mutual fund, ARMS also have something like that. The person is asking like, how can he get started with money market fund? I will
Um,
assume like I know the answer, but anyways, I will allow you to.
okay. So for Meristem, we have the Wealth Body app, Wealth Body by Meristem. Um, for all things mutual funds. Um, yeah, for all things mutual funds, you want to even do your normal fixed deposits, you can also do it on the app. Um, but if you want to invest on individual stock, like you want to invest in the stock market on your own, then we have Mary Trade by Mary Stem. But for mutual funds, fixed deposit, Wealth Body is your go-to. And I think before the meeting ends, I can just drop the link in the chat box. It's just good. It's straight through process. You register, create your account, get verified, and you're ready to go. The app is very self-explanatory. Everything is there for you to see.
All right, great. Thank you so much. Any other question? You might want to unmute your mic and speak. I mean, it's an open meeting. So if you have any question that you want to ask, please, this is time to go ahead and unmute your mic. So while everybody is preparing, there is a question someone asks sometimes back and is around fee for mutual fund. What does fee look like for mutual fund, especially since it's being managed by a company, portfolio manager, let me put it that way, since it's being managed by a portfolio manager, what does fee look like for it? And also what does withholding tax and CGT looks like? Of course, we know as of today that CGT is hard to be. If your interest is more than 10 million naira, then we can begin to look at you around the CGT tax. But if it's less than, you are fine. So, but what does WHT, that's withholding tax, and then the fee, what does it look like for money market fund managed by Meristem?
Okay. Hi, can you hear me?
Yeah, sure, I can hear you now.
Okay. So that's actually a nice question. So the fees you are paying is basically what the fund manager is doing. The fund manager, which is Meristem now, they're taking all the burden of them doing all the research to invest. Right. So we have a couple of fees in all that management fees, but what you should see ranges between 1.8 to 2%.
Mhm.
So, and that's an annual rate. So it's not like, oh, they'll be charging you 2% monthly. So, like in a year, that's what the fee is going to range at. And um, firms don't just come up to give his. There are regulations around it as well, right? So you should see it within that stated range. For capital gains tax, um, I'm not really sure how that plays into money market investment yet, because in order for you to trigger a CGT, you need to buy and sell something. But again, the capital threshold for that to even be triggered is 10 million naira, which I believe most investors and most investors won't even get to that threshold immediately to trigger that tax. I think the people that will most likely have this should be the equities guy, because they have the most um, investment growth in price compared to the fixed income portfolios. So that CGT is going to be more prevalent in that space compared to the money market. And for
W-
you mentioned
withholding.
withholding tax.
Mm,
Hmm. I'm trying to think. Well, so that withholding tax, based on the way the portfolio is was formed, each of
yeah.
those investments already earned a gross interest on their end.
Mm,
And at the end of the day, the withholding tax are charged on those interests. So those
mm,
it has already been passed through from the interest the individual investment in that portfolio has earned. So what you get is your gross return net of those taxes before performance fee, which is the 1.8 to 2%. So normally on the Meristem platform, you can see the money market you see a gross of 18 and then a net of maybe 17 point something. So if you do the difference, that should be the normal management fee. So your 18 has already carried your WHC and everything that should be.
mm. Okay, okay, that makes sense. That makes sense. Um, any more questions from anybody? If you have any question you want to ask, please, you can go ahead and ask a question. I guess no more question from everybody. I think it's clear. Okay, I think no more question from anybody. So thank you so much, Mr. Salisu Mohammed. This was super helpful and insightful. I believe most people have learned. There are new things that people will then go ahead and look into, possibly go ahead and then invest in. I mean, this coming week, I believe the knowledge is not just the knowledge, it's about doing it, which is the most important thing. And we mentioned over and over again that what is important here is about doing. You could have like a lot of information overhead coming to you without you executing it. It's almost like you're just accumulating notes, to be honest. In the financial world or the financial market, we only have experience by doing stuff, right? All these things that have been explained so far today, you'll see play out as whenever like please don't forget to drop the link you mentioned. Yeah, Mr. Alice, you wanted to drop a link for, I think, is it where?
Yeah. Yes. I'm unable to access the chat, so I dropped it for you instead.
Oh,
Each time I try to access the chat, I get kicked out of the call.
oh, all right, no problem. That's fine. I will just copy it and then share it with us in the community. I think that will work. Yeah, so I guess that's the end of today's meeting. Next month, we continue in this line. Mr. Isaac of MoneyWise will be coming next month. And the upper month, we'll be having someone from the Bamboo team to come around and then share some stuff with us. So I mean, we have exciting times in the community. So, but then, like I mentioned again, it's not always about the people that are coming or myself talking about investment. It has to be you executing it, taking that action and say you want to do A, B, C, D. Because without doing it yourself, there are little things you can actually be able to figure out just by reading or just by listening to people. You have to be in the market, test some things out, gain the experience of that, know what not to do and what to do, and then you can come in the next month and ask questions. Yeah, sure. The recording will be available and then will be shared. So that'll bring us to the end of it. Mr. Salisu, thank you so much. Thank you so much for this insightful session that you have with us. We are super grateful.
It's my pleasure. Thank you for having me here.
Yeah. All right, guys. So that'll bring us to the end of this month's session. Don't forget, starting from next month, look at the equity market. As always, there are interesting times. We are currently in a very interesting times. You want to look at into, but wait, don't worry, don't let's not talk about equity today. We talk about it another day, or oil or anything, or commodity, we talk about it another time. So today is just purely mutual fund. So see you guys next month. Bye, guys. The mess of this.